China officially released, "We are prioritizing NIO." Well, NIO has been all the buzz lately, hasn't it? It didn't hit its high, but it's still here in the news. If there's any chance at the hand of the Chinese government, well, probably. So welcome back to Stock Market News, you all. And without wasting any time, let's get right into the details of our video. And make sure you also hit our bell icon and subscribe to the channel so you get every single update about our channel. NIO stock has been hammered this year as investors respond to macroeconomic headwinds and industry-specific difficulties like supply bottlenecks, increased input costs, a potential economic downturn, regulatory uncertainties, and COVID-related business interruptions. Even after last month's rebound, the stock's still down 40% this year, prompting investors to wonder if the bottom is in. Over the last month, NIO has surged as high as 25% in reaction to increasing confidence in China's post-pandemic recovery and local official assistance intended at boosting EV sales momentum to prop up the nation's economy. Soros Fund Management, ARK Invest, and Bridgewater Associates have all raised their stock holdings in the previous month. Based on NIO's first quarter delivery numbers, the company's underlying success shouldn't be a surprise. As the first quarter earnings report approaches, investors will undoubtedly look ahead. First, supply chain and production constraints. NIO delivered 25,768 vehicles in the first 3 months of the year before the COVID-0 lockdowns in Shanghai and Beijing. The results marked another quarterly record for NIO deliveries, rising 28.5% year over year and meeting expectations. The second quarter was significantly gloomier. While most domestic car OEMs, including NIO, avoided major performance repercussions in the first quarter, the citywide lockdown in Shanghai that began in late March has upended the automotive industry's performance and the nation's economy. The China Passenger Car Association reported a 35.7% fall in passenger car sales in April, which lasted into May owing to continuous COVID interruptions around the country. The harshest lockdown in Shanghai, a main domestic market for NIO, led to zero sales for the city in April. NIO shipped 5,074 units in April, a 30% drop from the previous year. May deliveries reached 7,024 automobiles, up 5% from the previous year, but well behind April to May 2021 numbers, which were 13,813 vehicles delivered. Management has vowed to ramp up production capacity and accelerate delivery recovery starting in June, citing favorable domestic policy backing, removing COVID limitations, and strong order inflow. A favorable update on NIO's strategy to boost second quarter volumes on Thursday would be key for the company's projection, setting the tone for the second half of the year as the firm navigates post-lockdown logistical obstacles and production ramp-up at its new NIO Park plant. Second, regarding policy and regulatory updates, China's COVID-0 strategy has hindered its yearly economic growth of 5.5%. A broad-based economic collapse in the country might potentially hurt customer morale and NIO's growth forecast. The China government's COVID-0 policy has further intensified the liquidity issue in its growth-driving property sector, with housing market sales falling at a double-digit pace for the 9th straight month. Retail sales fell 11.1% in April compared to a projected 6.6% loss, highlighting consumer mood deterioration that might become structural. China's weakening economy is a near-term downside risk for consumer cyclical companies like NIO. The prospective extension of the EV purchase subsidy program, slated to expire at the end of the year, might boost the sector's development momentum and help it overcome the larger economic recession ahead. China's 2009 national subsidy scheme has increased EV adoption. China, which has the world's largest EV market, has given qualified purchasers more than $15 billion in subsidies. The milestone shows that subsidies may increase industrial performance even in challenging macro environment if sustained for another year. Shanghai's recent decision to prolong a $1,500 subsidy for every EV purchase to replace a gasoline-powered car bodes well for NIO's efforts to regain delivery numbers for the rest of the year. In addition to industry-specific policy support, the regulatory overhang that has weighed on Chinese equities for over a year is easing. Following the Chinese State Council's mid-March comments that regulatory crackdowns are approaching an end, rumors have circulated this week that Beijing is ready to finish its examination into Didi. The newest Chinese regulatory development, favorable governmental support for the local EV industry and the larger Chinese economy, and reducing COVID limitations have boosted views that Chinese equities may finally be on the threshold of a rebound. This is especially true for NIO, which operates in Beijing's shared prosperity and carbon neutrality environments. SEC delisting threats persist. The U.S. SEC and Chinese regulators haven't decided how to implement the Holding Foreign Companies Accountable Act for U.S.-listed Chinese shares. The HFCAA, which threatens U.S.-listed Chinese businesses like NIO that don't comply with PCAOB audit inspection demands, isn't settled with China. Although discussions between Chinese authorities and the SEC have shown significant progress in recent months, the U.S. Securities Watchdog said China's expected agreement to release its company accounts for examination would only represent a first step, since full compliance will depend on the PCAOB assessment. Recent homecoming listings on the Hong Kong Stock Exchange and Singapore Exchange main board somewhat insulate NIO from these dangers. In the rare case of a delisting from the New York Stock Exchange, NIO shareholders might convert their ADRs for Hong Kong or Singapore-listed shares, a less desirable choice given the Asian exchanges less active in liquid markets compared to American exchanges. NIO was recently added to the U.S. SEC's rolling list of businesses subject to PCAOB audit inspections by 2023 under the HFCAA. We expect the company to discuss the matter and its consequences on Thursday, including how the recent Hong Kong and Singapore listings may mitigate a New York Stock Exchange delisting. Third, international ambitions. In addition to its focus on Europe's developmental ambitions this year, NIO is boosting preparations to enter the U.S. EV market. According to NIO's latest employment advertisements, the business is looking for experienced automotive manufacturing workers in the U.S., corroborating plans for a new production site in America. Such intentions have not been verified by management, but they correspond with NIO's ambitions to expand to 25 countries, including the U.S., by mid-decade. NIO has become a local EV staple in China, but investors want more specifics on its overseas ambitions. Confirmed intentions for capitalizing on the U.S. approach might further push the stock's price to new heights in the long run. NIO's possible U.S. debut in the next 2 to 3 years would coincide with accelerating EV usage. The Biden administration's drive to electrify the American transportation industry is predicted to boost U.S. EV sales in the second half of the decade. U.S. EV sales might expand at a CAGR of up to 30% to 18 million by the end of the decade, representing 14% of worldwide EV sales. NIO's arrival in the U.S. market might coincide with the EV market's peak. The U.S.'s urgency in electrifying its transportation sector to reduce emissions is likely to drive higher commercial fleet conversion rates, which would increase demand for fast charging solutions that NIO might profit from with its unique battery swapping technology. We don't anticipate NIO to discuss its worldwide strategy during Thursday's earnings call, but any update on the company's international expansion outside of Europe may be a good surprise. NIO's goal to reach 25 nations by 2025 lays the foundations for becoming a prominent global EV producer in the era of electric mobility. So, I think that's going to do it for today's video. I certainly hope you enjoyed it, and if you did, please give our video a thumbs up, smash the subscribe button, and press the bell icon so you never miss out on any updates. And if you have any questions or further comments on your mind, let us know in the comment box, and make sure you check out our channel where you'll find some more really cool stuff. Thanks for watching!